All right, let's get right into it. We're going to break down what has to be one of the wildest stock stories we've seen in a while. We're talking about Dragonfly Energy, ticker DFLI, and its absolutely insane run-up.
Just look at this number, 652%. No, that's not a typo. In just a couple of months, that is how much this stock has exploded from its bottom.
I mean, a move like that it's just wild. And you have to ask, right? What in the world is actually driving this thing? Is it just a bunch of hype, or is there something real going on here? Well, that's what we're going to find out. We're digging into the data.
Okay, so first things first. Let's just map out the timeline of this surge. How exactly did we get here?
And man, was it fast. If you go back to July, this thing was trading for just 15 cents. 15. By September, it's already past 52 cents. And then, bam! Early October, it hits a peak of $1.13. Just an incredible, incredible climb.
So what lit the fuse on this rocket? Let's talk about the fuel. We're going to look at trading volume and momentum. Let's start with volume. And the rocket fuel analogy is perfect here. The more shares changing hands, the more fuel you've got in the tank. And a rocket with a full tank, that's going to have a powerful launch. It's really a way to measure how much belief, how much conviction is behind a move.
And this just shows you exactly what I'm talking about. Get this. On September 26th, you've got 186 million shares traded. A week later, on October 2nd, that number jumps to over 391 million shares. This wasn't some quiet little rally. This was a stampede, a total roar of activity.
Okay, now this giant number, it's called on-balance volume. Don't worry about the math behind it. Here's all you need to know. A big positive number like this is basically proof that way more money was flowing in than flowing out. People weren't just buying, they were buying with conviction.
So how do you measure the speed of a move like this? Well, analysts use something called moving averages. And here's a great way to think about it. The EMA, that's your sports car. It's quick, responsive, it's the accelerator. It reacts to recent price changes like that. Then you have the SMA. That's more like a giant cruise ship. It's smoother, slower, and gives you that bigger picture view of the trend.
And here's the kicker. When you look at the charts, no matter what time frame you pick, that zippy little sports car, the EMA, is pulling way ahead of the big old cruise ship. And in the world of technical analysis, that's a huge sign. It tells you the momentum isn't just strong, it's actually getting stronger. It's accelerating.
But, when you're accelerating that hard, there's always a risk. You can't just floor it forever. So that brings us to our next question. Is this thing starting to overheat? Let's take a look.
And one of the main gauges for that is the RSI, or Relative Strength Index. The engine analogy is perfect here. Think of a high RSI like a tachometer screaming in the red zone. Sure, you're getting maximum power, but it's also a massive warning sign that you might be about to blow the engine.
So what's DFLI's RSI? A scorching 88.48. Now, just to give you some context, analysts usually consider anything over 70 to be in overbought territory. So 88, yeah, that's not just in the red zone. That's pushing the needle way past it.
And look, it's not just one warning light. It's the whole dashboard. You've got the Williams %R, the CCI, the MFI. They're all basically screaming the same thing. Warning, conditions are extreme. The whole thing is lit up like a Christmas tree.
Okay, so you've got this insane power, but you've also got all these warning lights flashing. So what gives? What's the path forward from here? Let's break down what could happen next. To figure that out, we got to talk about two key concepts, support and resistance. It's really simple. Think of resistance as the ceiling the stock price keeps bumping its head on, and support, that's the floor it keeps bouncing off of.
So for DFLI, these are the levels everyone is watching. The ceiling, the resistance, is right around that recent high of $1.13 and also that key 120 mark. The floor, the support level, is down around 67 and 50 cents. Right now, the stock is just kind of bouncing around in between those two.
So given those levels and everything else we've looked at, the technicals are pointing towards three main possibilities, three different ways this could play out. All right, so here they are. First, you've got the bull case. That's where the momentum is just so strong it smashes right through that ceiling and keeps on running. Then there's the neutral case, where the stock just takes a breather. It chills out for a bit, bouncing between that floor and ceiling. And finally, the bear case. This is where all those flashing warning lights we talked about really matter, and we see a sharp drop back down towards that floor.
If you had to boil it all down,
This quote from the analysis really nails it. They call it a high-momentum growth stock in a powerful recovery phase.
And that's really the heart of the story here. It's a tug of war between two massive forces. On one side, you have this incredible momentum trying to push it to the moon. On the other, you have this huge volatility and risk that could send it crashing back down.
And that leaves us with the big $1 million question, doesn't it? Is this amazing surge the start of a real, sustainable recovery, or is it just the calm before a very sharp, very painful storm? The technicals have laid out the battlefield for us, but who's going to win this fight is still anyone's guess.